following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are your bi-weekly choice for all things options-related, polar vortex or no. In fact, it doesn't seem like it's an Option Block recording anymore if it's not at least minus 10 or minus 20 outside our office door here in scenic and sunny Chicago. My name is Mark Longo from the OptionsInsider.com, as well as from this here Options Insider Radio Network. And indeed, stay tuned, perhaps even this afternoon, gentle listeners, for we are going to be releasing the latest edition to the Options Insider Radio Network. That is our new Trading Tech Talk program. If you want to hear a program that breaks down all the latest happenings behind the scenes after you click your trade, what goes on in all the hinterlands of technology between that mouse click and the execution and back again, then check out Trading Tech Talk. I think you're going to like it. But joining me on this program here today, we have the usual cast of characters, mostly frozen and starting to thaw themselves out and chisel themselves out. Starting off with the man beaming in from sunny and warm Casa Jacobson, hot chocolate in hand. He is none other than the Viceroy himself, Mr. Alex Jacobson, from the satellite HQ of OX. Mr. Jacobson, welcome back to the program, sir.
Good to be here, Mark. I just dropped a marshmallow. So
watch out. Don't get it in the keyboard. That could mess things up.
Yeah, it's away from the keyboard. But good to be here. And yes, it is cold. And I have no sense of this market today. I tore up notes not once but twice today. So interesting day in the market, a little bit of schizophrenia. But glad to be back.
Yeah, I had a similar issue because I wasn't around most of the day, so I had the team drop the first draft of the notes. Then I came back towards the end of the session, and I rewrote them thinking the narrative had changed, and now the narrative has changed yet again by the time we are recording this. So thrice with the notes today. Interesting stuff. Also joining us on the old program today, beaming in from the tropical, dare I say it, ultra balmy Maine, a nice 32, 33 degrees over there. None other than the Rock Lobster himself, Senior Andrew Giovinazzi from OptionPit.com. Mr. Rock Lobster, welcome back to the program, sir.
The lobster is warm and cozy today, actually. Unbelievable. Warm and cozy, and I'm just looking at, I think it's 34 degrees, which is about as warm as we've been in a couple of weeks here. But got in a lot of ice skating this weekend, so I'm a happy guy. 39-1 is the range of temperature today, by the way, in good old Maine. 39-1.
Getting a good workout for those hot skates.
Exactly. There was no cross-country ski exercise today. It was an indoor cross. We're actually running out of snow in coastal Maine. The mountains have a lot of snow, but we're running out of snow here in coastal Maine.
And last but not least, deeming to join us from peeking away from his trading screens for the Big Fruit Company for a few minutes, none other than Uncle Mike Tosaw from RCM Asset Management, RCM Wealth Advisors. Mr. Tosaw, welcome back. Glad the Skype gods are smiling at you from frozen St. Charles, Illinois.
Well, we're moving up in the world. We actually have 2 internet lines here in our town now, and Grandma only makes me share one of them, so I think we're doing okay today.
All right, and with the team assembled, we're going to roll right on into the trading block.
The trading block.
All right, listeners, those bells mean that it is time once again for the trading block, the portion of the program where we break down the day's worth of action and activity on the street with a bit of an options slant. And as Alex alluded to at the top of the show, it was a bit of a weird one today. It started off the day selling off pretty aggressively. I think the S&P has got down to about 1772. And then towards the mid to latter parts of the session, we started to see those gains, or those sell-offs essentially erased. I believe at one point S&P was unched, if not up a little bit. And then now closing the day, S&P's back down about half a percentage point to, or nearly 9 handles to 1781. So off the lows of the day, about 10 handles off the lows of the day, but still just a dramatic day, vol all across the board. And yet, in spite of that, people still not being big buyers of vol. We're seeing the good old VIX cash coming in a wee little bit, down a little over half a point to 17.51 on the day. Mr. Andrew, did that surprise you, today's performance out in vol land, given the fact that we are seeing quite literal volatility in the marketplace, yet people, they're buying it, all right. And, of course, we sold off a bit, so we rallied a bit, so vol is going to sell off. But we didn't really make back much of those gains towards the end of the day there.
Oh, you mean in the as far as stocks go? No. It was really weird. I mean, we traded like 177 in SPY. Take your pick on which one you want to follow. Vol got and actually what was happening is the VIX futures got a little real backward. Like the front month started, it didn't get very huge, but there was like a little worry there, and then the market kind of held that 177 level or something right around there. And, and a VXX, that product was actually at 10% today. I don't think VIX cash was ever up near 10%. As far as, so it's a pretty good move. It's about 4-handle move up total. So there was a bid for volatility. People started to get a little nervous, and then it all kind of stopped. And I'm not quite sure what it was. The bid came off the treasuries a little bit. It just felt like things started looking better. I think we were actually up on the day for a while. Vol came in. The volatility futures came in pretty good. They basically erased all their gains of the day and went slightly negative for a while. And then whatever switch somebody hit, they hit it back and market started to sell off again. So down about 0.5% for the day. So really I think there's just some confusion on where what the reason for the sell-off was at this point. I mean, the earnings we've got some big earnings coming up. Caterpillar earnings were really good, and that they do a lot of foreign selling. So our market's still trying to figure out where this Argentina is the start of something new, or it's just kind of a tempest in a teapot type of thing.
It's interesting. A lot of people attribute these massive end-of-day swings to the people hedging all the negative gamma out there. And yet, day like today is pretty much a perfect case that isn't the case, at least for today, because we rallied back to unch. So if you were out waiting till the end of the day to hedge your negative gamma, you were happy. You were actually a little bit up on the day today. So this latter part of the sell-off, at least towards the end of the session here, certainly wasn't negative gamma related. I'm sure there are a lot of other things we could point the finger at. Of course, you're right, Argentina, lots of other concerns floating on the market. But all those people out there who are like, oh, it's the HFT guys hedging their negative gamma. That doesn't seem to be the case, at least today. Now, Alex, I was doing a tour of a few different firms all around Chicago today, and I was surprised at the general lack of activity I saw in a lot of them. Just seemed like for the activity we saw on the street, particularly the last few sessions, it seemed like today was a little bit quieter. Was that the case over there at OX as well, and maybe less until the end of the session when things started heating up a little bit?
Tell you what, through the first half of the day, option volume was actually very, very good. And I think some of that was still a carryover from the events of Friday. I'm talking about volume, not direction. But overall volume, Friday was just a phenomenal day, but volume today was really, really good. So, the challenge, Mark, when you visit people is how much is going on electronically. I mean, I remember when we used to give, floor tours at the SIBO. You take people into the old visitors gallery and they look down at the floor and they'd say, nobody's doing anything. And you'd say, no, we're actually having a near record day today, but it's all electronic. So I'm not sure how good of a cursor. I mean, I don't know where you were, but I'm not sure how good of a cursor just looking at, kind of physical activity is anymore. Because of the electronics. But as I say, volume was good today.
Yeah, you're right. It is kind of hard to go in and get the snapshot of these places just from hearing the audio level and and seeing the people scrambling. Of course, when they're all off at eating at the different stations, that's probably a good sign. But yeah, you're right. It is a little bit different beast these days. You don't go and get the instant flavor that you used to walking in and everyone's on the phone and there's a cacophony and things are moving, things are happening. Speaking of things moving, Uncle Mike, you guys are always moving and shaking out there in scenic and lovely St. Charles, Illinois. And today in particular is a day of much interest to you. Of course, I'm talking about the company that produces those delicious jams and jellies for your minions is coming out with earnings right now as we speak. So I'm sure you're very, very in tune to that right now.
I'm sorry, what were you saying? No. Yeah, today actually it was... this is kind of an odd day for me. It was a very active day with hedging more of the index positions and making adjustments and that type of thing. But yet with Apple, there really wasn't anything to do. So just kind of waiting and seeing what we have here in earnings here in a few minutes, and we'll take it from there. One thing that, and I can talk a little bit more about this in the strategy block either today or on Thursday when we do it, but rolling down puts as part of an overall position is something that when you have days like today, it's something that can be done. Now, of course, the trick is that if you're doing it on days like today and that's the only position you have and you have no other risk management in place, then it gets kind of stressful. But I'll explain a little bit more in the strategy block about some of the things with which I did today, and turned out not too bad.
Yeah, it's a weird one to look at as Apple as well because, of course, very famously they announced a little bit later date than they typically do. Usually they're towards the latter portion of the week, Thursday or something like that, where at least that's what people expected this time. So people were leaning into weeklies of last week. Of course, we talked about that. They all got crushed in the premium. So this week we're looking at some I looked up, they went out at about five half almost exactly. That 5.5 straddle going out about $28, $29, which is not a bad level for an Apple straddle given all other things being considered going into earnings. Of course, this is actually, there's still some meat on this contract even post-earnings. It's a full week's worth of activity here on this contract still to go. So that kind of gums up the works where I think we're used to looking at it with just kind of almost pure straddle built in. Granted, there's still a lot of earnings premium built into those levels, but that's not overall, it's still an interesting beast to look at.
We looked at this. This was one of those weird, like we call it like a baby bottom straddle pattern where the vol curve actually looks like a baby's bottom, where there's the at the money is very bid for volatility and the tails are really offered. So there's a vol curve that actually kind of spikes up in the middle. So you could put on like ratioed butterflies and stuff like that for, I think a decent credit. And if Apple has a blowout number or does nothing, the straddle, the trades make money. So it had this kind of pattern last time, and Apple, they had a decent number but it was kind of a meh-like trade. So, but it's showing kind of the same thing. So you don't really have those Apple bulls that you used to have. I thought I would mention that as we move forward.
Yeah, we saw this pattern exhibit itself last cycle, as we write as well, Andrew. And yeah, it wasn't exactly the best trade. You can get better levels than you could normally by legging into some of those verticals and things, but it wasn't, you're right, the typical one-sided Apple bid up the call skew and nothing else kind of thing. It was a little bit more little bit more even keel than we've seen in years past, and it seems like that seems to be the case again going into this cycle. As we're recording, looks like they're up a little bit, so I'm not sure if the number is out, if that's just some pre-number fluff. That is the number.
430, right? 430.
Oh, yes, you're right. So it's just a little bit of pre-earnings fluff here. I should mention to all of our listeners who want the dates, we are recording this January 27th here in the frozen hinterlands, so use that in all of your calculations. Of course, Big Apple earnings day. There was a few other things going on from an options perspective in the old news today and in the markets in general. Of course, a lot of earnings still dominating the headlines. From a specific options perspective, we talked a lot in the past about various attempts to break up the S&P monopoly over there from an options perspective at the CBOE. ISC in particular has gone back and forth with them quite a bit. They sue, they lose, they appeal, they sue, they lose, they appeal. It seems like a regular action for them over there. I once joked with them, they must love their lawyers to keep them busy all the time. But they finally have announced here that they're not going to appeal the most recent rejection of their attempts to challenge the S&P indexes and essentially to challenge that monopolistic control on the SPX contract. You know, they've tried a variety of different ways to kind of break that up and spread that volume across other exchanges. They've even proposed their own kind of large SPY type contract to kind of compete directly with S&P 500 options on the CBOE there. And at least for now, it seems like that effort is going to be tabled, at least for the near term, which is probably a good thing. People have been going back and forth on that forever and just ends up driving up legal fees for everybody because it seems like the legal weight is behind that one, at least for now, at least. It seems like you can have a monopolistic proprietary product if you develop the R&D and put it into it, and you can license that. And that is at least how things are standing right now. Anything else, Alex or Mr. Tosaw or Mr. Andrew, before we keep on rolling right on into the odd block?
The last thing I would say is just watch that crazy natural gas. Supposedly we have tons of it, but I guess they're having little supply hub issues or something like that because traded over $5 today. Had like a 10% range, which is pretty big for a commodity contract.
Yeah, you're right. You know, it's funny you mentioned that, Andrew, because I was talking to a bunch of different firms today, and I was talking to some risk guys just as it might happen. And, you know, you expect me talking to risk guys that, you know, you're going to hear the standard things, people are writing crazy calls on Apple or whatever, things like that, you know, downside puts and whatever crazy name, or upside calls and whatever biotech that blew them out. But all of them are pretty much focused on Nat Gas. That seemed to be where a lot of their clients were heavily overwriting and starting to rue it, at least right now. So interesting that we're seeing so much interest in that contract these days. And that pretty much just shows the fact that it's finally starting to move again. You know, it seemed like it was almost pegged around that 3.5 level for so long that there probably was a good overwrite trade for a long time, and now it's starting to break out of that range. And people are starting to feel the sting of that. Are you guys active? A lot of your clients active in the Nat Gas options?
We have a couple that look at it. I think it's been a tough trade. The volatility is like super expensive in there right now. I maybe some upside flies or something like that in it, but it's just I feel it's kind of breaking out in sort of a no man's land. So as expensive as the volatility is, sometimes it's fairly priced given how the underlying has moved. So we haven't really touched that one yet.
Are they doing the big futures options? Or are they doing garbage like UNG?
They use the junky UNG. It's all the March contract, I guess, until for now, or the way they have that set up. So it was real volatile, that name today. It had, but again, it's like a 10% range. So I guess that was including the after hours. So a lot of volatility in it. Now that so many people are actually using gas, just that little uptick in demand really caused some bottlenecks in certain places. So, that lovely sunny Chicago is there's a lot of natural gas there. So,
and not just on this program either.
Not just on this program.
I'm surprised you. Oh, go ahead, Alex.
Yeah, Nat Gas is clearly the one place where people have learned that the ETF just doesn't cut it, and a lot of the traction has been in the futures options, and that's again one of the places where futures options really have served the investor better, and it's a place where there's been a lot of traction. I mean, we do a boatload of both the future and the futures options. In fact, on our social site, one of the most active topics lately has been the Nat Gas options. And a couple of those strikes in the last 3 or 4 days have actually doubled in value. So, I guess it's the reality that in a lot of these commodity products, the ETF market just hasn't been giving satisfying results. And it's really the reality that it's not that easy to replicate, in the ETF market, with the exception of something where you can actually hold the physical, like the GLD or the SLV. You get a funny structure in terms of the way it pays off.
You're exactly right there, Alex, and you're right, listeners. If you're interested in the futures options versus the ETF options, I encourage you to check out our futures options roundtable. In fact, our most recent episode, we just dove into this topic at great length, including all the different roll risks you can incur in these types of things. And Andrew, I'm quite surprised that you actually allow your clients to dabble in something like UNG. I know you take a dim view on these pretty much in general. And Alex is right. This one has taken a beating of late. I haven't seen as many studies on UNG. I'll have to go back and dig it up to see exactly kind of how much roll risk you're incurring in this one. I'm not sure how often they're rebalancing here, but I know some of the vol ones that roll risk 10 to 15% a month, depending on which product you're looking at. Nat Gas, I'm guessing, is probably somewhere at least in that range, 5 to 10%. So, plus, not to mention the performance characteristics that come with that as a result. So, I'm surprised you're not leaning on them to get into some of the big futures options instead.
A lot of them trade the future options. Our clients that actually trade it. But yet the only thing where UNG, it's still a short-term product. It's like, with VXX and the other. It's just they're not a few days, if that's what you want to do, is not that big a deal. It's not like you're buying UNG to hold for the year. Okay. It's a strictly to play some of the faster moves in volatility. And you close and that's it. So there's no long-term UNG play there.
To Andrew's point, to folks who have good tools and really understand options in the energy complex, intraday you can craft spreads. As options people, we always get that question. Well, would there ever be a chance that I could do this kind of, ratio or back spread and do it for free or put it on for credit? And you say, well, you kind of shouldn't be able to, because there's lots of market makers with lots of machines, and they're going to beat you to that trade, which is not always a great answer. But in the energy complex, where there's still not as much traction in the dealer community and the professional community as there is in the retail community, it's not uncommon during the day that you'll see stuff that will trade at prices, where you'll see a customer execution and you kind of go, look at it and analyze it. And you go, darn, that's good. That shouldn't have been there. And it wasn't there for more than a bit, but those markets are still, I don't want to say they don't have robust trading. They have lots of volume, but the options will get out of line. And, to Andrew's point, some of these things will trade huge volatilities, and there's spreads or those ratio spread opportunities in some of this stuff that for folks who get it, they're a great place to trade.
Yeah, a couple of years back, to add to that, one thing that I was doing for clients as a fixed income replacement type of thing was, I believe we were actually long, and I'd have to look back to see what the exact position was. We were actually long UNG. We were long 1 year out at the money put, and then we were able to sell same expiration, a $1 out of the money covered call on it. And we did it all for even money. So in lieu of a fixed income play, one thing that we did is we were long UNG, and it was a risk-free trade with the exception of commissions. And the reason was kind of like what you said, Alex. We were able to find situations like that at times, and that's how we played it.
Yeah, good point. But let's just make a point before we encourage everybody to look for these risk-free trades. You're going to have to leg into them. I mean, there's going to be risk. There's going to be opportunities intraday. But your point, Mike, you didn't put it on as a risk-free trade. You evolved into it over a little period of time.
This one, I actually found a couple where intraday they were risk-free, believe it or not.
Yeah, well,
but I will add to this, those are extremely rare, and in 10 years of staring at screens to where my eyeballs are fried,
yeah,
it does not happen very often.
Yeah, it's you got to be savvy. You got to have good tools. But there are markets, and especially in the energy markets, they may exist elsewhere. I don't think you'd see it in, Eurodollar or the 10-year or the 30-year. But of course, as soon as I say that, I get an email from somebody who shows me a trade they put up. But in the energy markets and in many of the futures option markets, where there still isn't as robust market making, some of the people have great tools, but lots of the people are still kind of trading them not with the best technology. You'll see opportunities. And to your point, Mike, if you can arb against an ETF, it creates a real interesting position. But you're going to have to, the part you arbed against the ETF, you're not going to be able to stay in that part long because the ETF may lose the tracking.
Yeah, it was one where, in all honesty, it ended up being a zero because the UNG eventually went down anyway, so it turned out to be a commission loss trade, but it did its job, so to speak, for the time being. But I haven't seen anything like that, and it was just a very rare window of like 2 or 3 days that this existed like 5 years ago.
Yeah, I had a hedge fund client who put on both put and call back spreads in energy, when oil went to 150. And these were savvy guys with great tools and had very little risk and made, gobs of money. But those trades won't be around long. Ironically, in energy in that year was so much of a distressed market. And a lot of times I get the question, people say, well, define a distressed market. And I'll give you a quick, dirty answer. Anytime volatility is over about 75 or 80%, that's a market that's in some distress. Doesn't mean pain. It just means that you're going to see volatility opportunities, but you got to look for them, and they may be up there for a moment, and they may be gone.
All right, and with that, we're going to keep on rolling right on into our next segment, the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right. Welcome to the Odd Block, listeners. This is, of course, the portion of the show where we break down the interesting and or the unusual options activity that was lighting up the old tape today. Before we do that, right in the middle of that transition there, we did see Apple finally announce their earnings here. And as I mentioned earlier in the show, they closed today at about 5.5, with that 5.5 straddle going out at about $28, $29. All right. And it seems like the premium buyers, at least for right now, are on the cusp. They may come in, they may not. We're seeing Apple down about, it's rallying a little bit now, only down about 20 handles or so now. It was down about 24 handles or so. So far, at least, that straddle underperforming. But again, it is very, very early, and we still have a lot of time to digest these numbers. At least right now, that is our take. Uncle Mike, really quick, what's your take here on so far what we're seeing here post-announcement from Apple?
A lot of times the first move is the wrong one with Apple.
Yes,
so
you're right. We see that with Intel all the time. It would gap hard in the wrong direction, and then once the street actually parsed the numbers, it would turn around. And those are when you get some of the best gamma scalps ever in the history of man. Or you get run over one way or the other.
I would love to be able to trade options right now on this if I could.
Uh-oh. Uncle Mike coming over to the dark side of us beating the drum for after-hours options trading.
I've been on that same side with you for a long, long time. I would totally love to. Right now I'm in a call spread to the upside, and long a put, long a call spread, and I would love to close the 600 short calls I have right now, but I'll wait till tomorrow, I guess.
Just think about it, Alex. If Uncle Mike is saying that, how many thousands and tens of thousands, if not more, other Apple options traders are scratching their heads and saying that exact same thing right now?
Don't start me.
I'm going to wind you up today.
Two things the industry needs to do is trade after hours and give me cash-settled equity options. And two things they won't do because of inter-exchange politics. And I'm saying that as nicely as I can.
All right, before we get Alex too wound up, we'll keep on rolling right on into the odd block. Going to kick things off with a name we haven't talked about here in a while on the old odd block. This is EAM, the iShares Emerging Markets ETF, ticker symbol EEM. Closing today at $38, roughly even on the day, pretty much unched on the day. So it wasn't big underlying movement that was catching our eye and driving options volume today. It was one big print, essentially, on a way out of the money strike here. We saw someone just piling in to the March 24 puts, and I said it closed at 38, so these are substantially out of the money puts. We saw when we wrote it up, there was 25,000 going up for prices about 6 to 7 cents. So he's scooping up really cheap. In the old days, teeny they would have been called, teeny puts. Total of 30,000, nearly 31,000 going up on the day. It was just some weird paper lighting it up out here. This looks like this was opening buys. Definitely opening. Only 2,800 open on the strike. So this is definitely opening paper, whichever way it was going. Looks like these are pretty much opening buys. And pretty interesting place to be drawing your line in the sand. There's some other put activity going on, including 10,000 of the Feb 28 puts going up here as well today. Some weird stuff going on across the board. Essentially 2x ADV for the volume in EAM today. But yeah, it was these March 24s that really caught our eye. Andrew, what's your take on this mega block of puts going up here? Way out of the money puts in EAM.
Yeah, I know. I thought this was kind of it just seemed like why? That's a pretty, March 24 puts. That's 12, 14 handles out. That's a like 30% drop in the emerging markets. So it's not a small drop. Listen, anything can happen. I've been trading options long enough to know anything can happen. It does feel like kind of some severe risk control, like they might have a lot of short positions in another place. And it felt like some sort of a hedging type trade. Like somebody's buying some insurance to trade something else. It didn't feel like kind of a standalone buy to me. Could be, but it felt more like from the insurance side of the fence.
I mean, there's some other weird activity going up in that same month on the put side. We saw 28,000 of the March 34 puts going up. Those are much closer at the money, obviously, on 47,000 open interest there. So that could be maybe he's taking some of those off the table, or maybe even the 33 puts, 20,000 going up there on 13,000 open interest. Could be he's adjusting some of those and rolling down. But that's a weird place to roll to the 24s. You're right, that whole strike just strikes you as odd. Hence the odd block.
Hence the odd block. It was an awful lot of volume, way the heck down there. A lot of out-of-the-money put buying. And like I said, it feels like it could be hedging positions in other places. Normally, volatility seems to trade at higher prices in the OTC market, kind of dealer-to-dealer type trading. And then they go and say, okay, well, I'll go hedge it in the option market, and I'll buy 30,000 of these puts. So it felt like that kind of trade. It certainly was an awful lot of out-of-the-money put buying, especially on a day when EEM. I mean, it's down from, let's say, 40 on this whole Argentina thing. I mean, it's down, short term, but it hasn't really picked up steam going south yet. So, it's clearly some trader, again, insurance are looking for something really, really, really awful to happen. Again, anything's possible.
All right, and now we're flipping the script to the usual odd block script, which is size upside call buying. Size upside call buying, I should say. We're not used to all this out of the money put buying. Kind of interesting stuff in and of itself, just from an odd block perspective. But yes, we usually do profile. A lot of people are gobbling up calls here, and that's what we got again today here. In Time Warner Inc., ticker symbol TWX, closing today down about half a buck to 62.88 on the day. So the name that does about 2,000 to 3,000 contracts a day, doing nearly 53,000 today. So this was a bang up day for TWX. That's pretty much the entire amount of their open interest, only about 54,000 contracts open total. So doing their entire OI in 1 day's worth of trading was pretty interesting. Again, a lot of the activity rolling on out to March. When we wrote it up earlier in the session, there was nearly 16,000 of these March 67 halves going up for about 52 cents. Looks like it went through the offer, so we're looking like it's pretty much an opening buy here. And by the end of the day, we had nearly 38,000 of these calls had gone up on open interest of just 65 contracts. So size opening paper here on these March 67 halves. Again, these are about 5 handles out of the money, a little bit closer than those puts we just saw, but still just size paper going up here in the upside in time. Mr. Andrew, what's your take here on this just call extravaganza in TWX?
Yeah, I think this is kind of crazy. Now I try to do some research on the stock because I think you might have a little time on this one.
Just a wee bit.
Broke the skew open on the upside here, so there's a little bit of upside curve now, which normally doesn't happen in a name like this. I'm just like in my head, I'm like, does Time Warner still own Time Warner Cable, and is there anything to this net neutrality? Has that come down? But I mean, these calls are $5? They were $5 out of the money, $4.50 out of the money. Now for Time Warner, that's a pretty big move. So. I mean, this is an en bloc special. Somebody's buying, pretty much the most, theta intensive option they could probably find, and they need a huge move. And I don't know what they're expecting out of Time for earnings, but they're expecting something fairly gigantic. So again, very strange buy. The volume was strange. The first big print went through the offer, and as the stock kind of traded lower, paper just kept buying these calls. So I find it, again, it's an odd block special and hugely bullish for, I don't know what you can get bullish on Time Warner on.
Yeah, substantial move required, 6, 7, 8% for this thing to really pay off. And then, of course, we have earnings on the 5th of February, so these are substantially beyond earnings as well, not exactly a straight-up earnings play here. And you're right, just crazy size, nearly the entire open interest just on one strike and one trade of the entire open interest of this entire name. So this guy, whoever this is, or they, is just piling into some size upside here, which, again, makes it interesting for us. And we're going to flag this one to be watched here and see what results of it, because this is just... like those puts, this is some crazy size out of the money action that we'll keep an eye on. We got a little bit of time for it to come true till March, so we can see what this guy does.
Is this the Comcast Charter deal? Because there's talk that Liberty's going to come in. I mean, it's gossip, but the news carried today that Comcast and Charter are talking about combining to take some of the Time assets, and then there was talk that Liberty is going to be a spoiler in this deal. And that's kind of a lot of out-of-the-money calls. It looks like somebody's saying that this takeover is going to turn contentious.
Well, I know. Are they buying Time Warner? That's my question, because you're not getting the cable assets, I thought, with this one. That's why I would still want to dig a little, because the only thing I could figure is something has to get very expensive here. And, they're gonna buy just the straight-up entertainment stuff without the I had to look a little more, but I just thought it was something more to do with the cable assets. But I guess that's what the Viceroy is saying, so it must be true.
All right, we're going to wrap things up here in the old odd block. It wouldn't be the odd block without a $2 name, so we're going to hit that one. This is Mechel OAO, ticker symbol MTL, trading $2.02, so they're a pricey premium stock. And what we saw today is some, your typical what you see in names like this. People gobbling up some upside, way upside in this case. These are the March 5s we saw. These are the Jan 2015, so way out there. 5s going up. We saw, when we wrote it up, about 1,000 of these going up for about 25 cents. By the end of the day, we saw 5,000 of these things going up. They're nearly 11,000 open on that strike, so there could be some closing but I'm guessing that wasn't your take. Do you think this is pure opening, Senior Lobster?
If you let's say you wrote this call, right? Would you close it when it was worth about 10% of the value of the company, of the underlying? That
I've seen crazier things happen in the odd block, sir. But I get where you're going with that.
I don't know if that would pass the sniff test on the Mike Tosaw selling an option against your underlying, but it's certainly possible. I mean, you could buy the stock for $2 and sell that call for 25 cents or 20 cents. You know, that's 10% right there with no underlying appreciation for a year. That's not as it stands, it's not a terrible trade, kind of buying the Russian steel industry there at the bottom. You never know what you get when you buy one of those companies, but it felt like opening paper. I'll look at the OI tomorrow. I want to make sure. But because closing the sale would be, you know, I just find that I would find that very funny. But that's what I think it was. It was just somebody buying to open and trying to get sort of long at the bottom. The stock's very close to its 52-week low, and it was like a $6.50 stock at the beginning of the year. So it's not a totally crazy purchase, but it's I think I would rather buy the 2.5 spread for 35 cents than buying the 5 calls for 20.
It's like you've heard this show before or something, Andrew. I don't know.
What are you going to do?
It's like we've been down this road before.
We'll see if that is truly. It could be somebody closing a great short and saying, you know what, we made our money and that's it. So that's entirely possible. But I don't think it would be against stock. I don't see why they would cover that, though. So
yeah, I agree with you. If I had to be in any way this one, it would definitely be on the covered side. Take that 10%, put it away if you want to do that, if you're a longer-term kind of guy. There are worse trades, certainly better than, I think, buying these things. But, hey, what do I know about Russian steel popping to 25 in the next 2 days? Who knows? We'll keep an eye on these ones as well. But for now, it's time to keep on going with the show right on into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Xpress Block. This is, of course, the portion of the show where the Viceroy takes the reins, beaming in from the OX Satellite HQ, a.k.a. Casa Jacobson. Mr. Alex, tell us what caught your eye in between the sips of delicious hot chocolate over there at Casa Jacobson.
My eye, but what was trading today? Well, we talked already about Nat Gas, and long as we're on the future side, the 10-year continues to be active amongst our customer base. 10-year realized 25 volatility today, but that kept things going. A lot of equity names were active today. I mean, obviously we did a lot in Apple today, and it's interesting when you and Andrew described kind of the skew picture. I was thinking to myself, I wonder if weeklies have altered how skew looks, but it's just a question that flashed, something I'm going to go back and look at. Handful of names were active today. MasterCard has been active a lot, and it's been both active on the electronic side and on the phone side. Caterpillar this morning, obviously a lot of activity there. Herbalife, the 2-3 days of schizophrenia, has been active amongst our client base. F5 Networks, we've talked about it a lot on the show. Stock is rallied about $20 in the last couple weeks. And VIX was active today as well. But in terms of volume, it was a brisk day. Really from the opening, little quiet in the afternoon, and then very active into the close. But brisk trading today, little bit of schizophrenia in the market, but that's what our day was like.
No, it's interesting you mentioned the weeklies because they certainly have impacted the skew, and we all obviously see it empirically here, but surprisingly little research done on that. We just had a guy on the Volatility Views program from Russell, who was one of the first guys last year actually to start collecting some of the data on just how the weeklies have impacted things like premium harvesting and how much different returns you can get by switching to weeklies versus monthlies. And that was kind of early on the cusp of that data. But a year or so past that now, it still isn't that much data on how the weeklies are feeding back into the big options and vice versa and impacting the skew. It might be something interesting to look into for future episodes here.
Yeah, and interesting you brought up Russell. You noticed Russell put themselves up for sale today, which is kind of, inside industry stuff, but that's it's going to be interesting how that plays out. I mean, CME has bought most of the S&P and Dow complex, but it'd be interesting here with Jeff Spector and his crew now controlling the Russell futures. Maybe controlling is too strong of a term, but having moved the futures from the CME. Be interesting to see who buys the Russell. I think that's, again, it's a little of my geeky industry insider, but I think it'll be curious how this plays out. I suspect one of the exchange groups could go for the Russell. So we'll see how that plays out.
Yeah, and you're right. CME obviously already has some skin in that game, so it wouldn't be crazy if they were to decide to complete the purchase.
Yeah, and Sprecher, and I've talked about this before, he's a aggressive guy. And there's been a lot of press lately, ICE bought NYSE Euronext and what Euronext is going to spin off and what they're going to keep. But Sprecher today was also all over the press talking about his unhappiness with payment for order flow and maker-taker, and he's clearly going to try to push some of the regulators to look at maker-taker. Now, I don't know that they will, but he's kind of stirring the hot chocolate up here a little bit, and it's going to be interesting to see how it plays out now that he's got a stock exchange, a couple options exchanges. Be interesting to see how much he kind of pushes the envelope here.
Yeah, he's not just that guy barking away from the OTC energy land anymore. He's actually got some skin in the game, and people are going to take what he says a little bit more seriously these days. And you're right, I was going to talk about that earlier in the show, the maker-taker stuff. I think we'll get to that on another show because that's pretty deep in the weeds. But it is interesting for a lot of us here in the options space to see how that plays out. Of course, he's focused mostly on the equities right now, but that conversation, if it starts in the equities, will eventually spill over into options as well, just like that model did. So be very curious to see how that plays out. But for now, we have to keep on rolling right on into the strategy block.
The strategy block.
All right, and that sound means it's time once again for the strategy block, the portion of the show where Uncle Mike comes on down from on high, stone tablets, smoking jacket, and pipe in hand to dispense some options, wit, and wisdom. And Uncle Mike, today, I don't think I need any birdies, any minions, anything at all to tell me what you're going to be focusing on because it is fruit day across the board. So go ahead and give our listeners a little bit of an insight into what you were up to today ahead of the big fruit company announcement.
All right. Well, with that, I want to go through. I'll touch on Apple briefly, but I actually have a little bit more wit and wisdom, so to speak, in, ironically, the Russell 2000, as long as we're talking about Russell. There, how's that for a transition? So just to touch briefly on what we have going on with Apple, we're currently long the stock. We're also long the April 535 put, and that's the way with which we're hedging Apple going into the earnings announcement. I didn't want to go too close to the near-term front month. I felt that's for what we're trying to accomplish with Apple. It's a losing battle. However, if you go too far out, it's something to where the option really doesn't have enough gamma to do what you want to do. So with all of our analysis, we ended up picking April. To the upside, we're actually, and I said earlier, we were in the 560, 600 bull call spread. We're actually in the 560, 600 bull put spread. We actually ended up getting a better fill on the put side as opposed to the call side. And plus, I didn't want to take any didn't want to take any risk of getting called out as unlikely as that would be, but still couldn't take that risk for the situation that some of the clients with which we're in anyway. So with that being said, the reason with which we're doing that is that we're not trying to make money on this hedge, meaning that assuming the stock went up, we don't want to make money on that. We want to make money on the underlying itself. Don't get me wrong, money's money. I don't care where we make it. But my point is that the goal with which we're looking for, we have a long-term bullish outlook on Apple. And if it were to go above 600, then what that would have done is the 600, 560 bull put spread would have created enough of a profit, in theory, to finance the cost of the 535 put with which we bought as protection. Now, to the downside, we want to have a little bit more room for a hedge on the downside. And the reason is that that's the purpose of what we're doing. We want to make sure that we have the unlimited downside protection for the time being. Later this week, we'll adjust this and we'll be in a different position, possibly even as early as tomorrow, just seeing how this plays out at the open. But this is an instance to where we wanted to use a straddle to hedge, but we didn't want to pay for the upside premium because we were fine giving up some upside if it were to continue to go higher because of the fact that we owned the stock. Now, with that being said, I want to kind of expand a little bit onto days like today and some things with which what I look to do and what you can do on days like today. Now, we have a position right now in the Russell 2000, ticker symbol RUT, the index. And this is a much more complex position, but just to kind of give you an idea of what we're in for one portion of the position, we were short the 11. Now, RUT is currently at 1127. The range in RUT today was from 1147 to 1121. Going into today, two of the legs in the position were in the 1120, 1110 bull put spread, meaning we were short the 1120 put, long the 1110 put. Now, with that, we have other puts to the upside, so we're not just short a put spread. That's not typically not how we roll, so to speak. But as the market went down, I'm just looking at a chain right now and going through the implied volatility on these options. Right now, this is the January week 5s, looking at the 1130 put, implied vol at 19.9, 1120 put, 21.6, 1110 put, 23.2, 1100 put, 24.8. And my point is that the implied volatility gets higher the further down you go with the puts. And the reason for that, we've talked about this on the show before, is that there's a lot more fear, so to speak, of hedging the downside as opposed to hedging the upside. So a lot of times there'll be more juice to the downside. I know Alex can probably talk about this a little bit. A lot of this started back in 87 after the great crash of 87 when this skew became existent in the option world. So where I'm going with all this is that let's say that you're short a put and the market's going down. You have the ability to buy to close that put, sell another one at a lower level, either in the same month or a month further out. And if the market turns around, it doesn't really bite too badly from the standpoint that you can still stay in the game. And I guess what I want to say is I like this adjustment if, and if you're taking notes, put a ginormous asterisk by the word if, you have other positions as part of a spread. Not a fan of just being naked a put and continuing to roll down puts, because then you're going to end up being out in 2026 if you keep rolling down puts, especially maybe you ran to a stock like CMGI or Enron or something like that. You're going to get burned doing that. However, if you have other option positions as part of a spread, which we do, and you're able to continue to do this, it's not a bad thing to do to the downside of continuing to roll down puts. To the upside with calls, it doesn't quite work as well, but the reason that I'm pointing this out right now, we're doing this with actual real money. And just to kind of give you an idea, I'm looking at one account with which we did this in, that just it's a smaller account that has just this Russell strategy and that we're doing it in. And even though we were positive delta at the beginning of the day, and the Russell is down 16 points on the day, we're still, just looking at the account balance on this specific account, we're still within like $20 of where we were at the beginning of the day, even though the market went against us. Now, there's more to it than that, but my point is that if you're careful, if you're monitoring these things closely, I will bless the downward roll. However, if that's all you have, if you're just doing this with put spreads and you don't have any upside to add to the spread, it will not get my blessing. And that is one to grow on for today, folks.
Thank you for that, Uncle Mike Tosaw. Dispensing blessings left and right, or lack thereof, depending on the strategy that you choose. All right. And that is going to do it for the strategy block. And now we're going to keep on rolling into our final segment, Around the Block.
Around the Block.
All right, everybody, welcome to Around the Block. This is, of course, our final segment. We'll do a quick check-in here on the old fruit company, see how they were doing after that big conversation from good old Uncle Mike. And right now, as of the final moments of this show, they're trading 518, so down about 32 and a half handles from where they closed. So it looks like the premium buyers are starting to smile yet again. We'll see if that holds the true into the open. Uncle Mike, what's your take on those levels right here as we close out the show?
I want to see what they have to say in the earnings call here over the course of the next half hour or so, and reserving judgment till then. But got to say, for a half hour for them to hold these numbers like that, it's going to be. I'll be surprised if Apple's above 550 in the morning, but you never know.
And Mr. Giovinazzi, what are you watching for the rest of this week? Obviously, the big fruit company kind of setting the tone. There are a lot of stuff cooking this week, actually. We, of course, have State of the Union, throwing a big political wrench into the works, potentially. Also got Google, got Amazon, got the old FB, Fed meeting. Take your pick. Pick your poison, sir.
Well, the FOMC meeting. I mean, look at the yield on treasuries. Alex mentioned that earlier. Like, wait a minute, I thought this taper was going to happen. Apparently not. I mean, so those yields are way below 3% now. So, but why? Is everybody jumping in because I guess they're all unwinding their emerging market bond positions? I mean, possibly. There's always that, the funds have those issues. So I think that's what's contributed to the churn and volatility over the last couple of days. There's just been the big, I'm going to get out. When you leverage those positions and you have to exit, volatility goes up. That's the way it is. So that's kind of what we're pitching in right now.
And Mr. Alex, what do you keep an eye on for the rest of this week, sir?
I think you guys have said it all, and I think Andrew showcased this issue of the flight to quality. And I forget what Barry Ritholtz said about the United States the other day, but we're like the cleanest dirty shirt in the crowd. But yeah, some of that flight to quality today. Markets have been schizophrenic the last couple of days, and markets have been thin. So I would caution people to tread carefully because of how thin things are here. And to Andrew's point, my key indicator continues to be the 10. I'm amazed by how the 10 has rallied. And if the 10 continues to rally, equities go back on their tear up.
All right. And that is all the time we have for the option block for today. But before we go, let me check in with each of my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods. Starting off with you, Mr. G, a.k.a. Mr. Hot Skates, a.k.a. Mr. Rock Lobster. What is cooking in the land of the pit? You guys are on a webinar explosion these days, it seems like.
Yeah, but we don't have any anymore.
Oh, so I take that back.
We start our new Platinum course Wednesday, or that's Wednesday this week. We start our new Gold class. It'll be the last one that I'm teaching live. We're creating a video library, basically based on how our clients view the data. They want it more in snips and drabs that they can look at it on their phones on the way to work or something like that. So we are reshaping, and of course, having live sessions during the day, but we're just changing the way we deliver sort of the educational part, and we saving the application part of it for like the more intraday stuff. So that's, I think, the two biggest things we have going on, unless Mark has something going on at the that RCM that we have no idea about.
Which is always potentially the case. Of
potentially
course, I do want to remind listeners that is not indeed gold trading. That is their high-level course, if you will, than the premium course.
Gold and platinum are high and higher-level courses.
So if you want the medals, look elsewhere.
We make you take one after the other so you learn stuff.
All right. No silver. You don't start with silver or bronze. You're straight to gold and then platinum.
We start with silver. Yeah, we start with an intro silver course.
Oh, okay. So no bronze then. You don't waste time with bronze.
We keep having people getting calls assigned on them. I go, will you take this course and save yourself the time and money for $70? Okay. For $70, it's going to save you at least $1,000. All right. That way you won't do anything dopey anymore. But what can you do?
What can you do indeed? Speaking of what you can do, you can hold your client's feet to the fire and make them hedge aggressively like Uncle Mike Tosaw likes to do. Aside from doing that, Uncle Mike, what else is cooking in the land of RCM? Perhaps, indeed, on the old webinar train.
This Thursday night, January 30th, we are excited. We have Cooper Sinclair from Jefferson National. We're going to be discussing fee-only annuities. It's going to be a joint webinar. I'll be speaking on how I hedge them. He'll be speaking on the ins and outs of the product, and we're really excited. The chocolate and peanut butter are finally going to meet on the webinar train.
Whenever you say that, it just makes me hungry for dessert, sir. So I guess I have to end the show now. But before we do, Mr. Alex, what's coming up in the land of OX education?
Wednesday, the 29th, technical analysis webinar. There's always a full schedule of webinars here at OX. Thursday, a platform tour that runs about an hour, and then another hour on new features, and we're going to showcase the walk limit. We've talked about that a lot, and it continues to be a product that just brings lots and lots of traders here to OX, product we're very proud of. Thursday afternoon, Deedon's going to do covered calls. All the education offerings are free. You don't need a login. Just come to the site, optionsexpress.com. Click on the education tab and register for any of the webinars. You can see the whole schedule. But there's always a full schedule of webinars.
All right, that is going to do it for the old show. And, of course, if you'd like to join us on the program, make your voice heard on the old mail block. We like to do those on Thursday, so get your questions and your comments in. A lot of great ways for you to do that. Surf on over to theoptionsinsider.com. Leave a comment on the show notes. We'll route it to the appropriate show. Of course, you can hit us up on email, questions@theoptionsinsider.com. Or you can find us on Twitter, twitter.com/options, or facebook.com/theoptionsinsider. And for the intrepid amongst you, there is also the new volatility voicemail hotline. You can call 773-6694-VOL. That is 4865. Leave us a voicemail. We'd love to hear your voices here on the show. So if you have a good question, 30 seconds to a minute or so, leave it on the old voicemail number. We'll play you live on the air, immortalize you for all your friends and enemies. So on behalf of Alex and Andrew and Uncle Mike and, of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.